Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. China's tit-for-tat retaliation against the EU might move dairy prices in New Zealand's favour, for a while at least. But first up today, we need to note that the American labour market expansion wasn't as strong as originally reported. They've revised their data down for the year to March. And the US Fed minutes for their July meeting were released earlier today, and they showed some policymakers saw a plausible case for cutting rates by 25 basis points at that meeting, though they have ultimately held off. That bolsters the view that the Fed is about to cut in September, but something well priced in by the financial markets. After the prior week's strong gain, there was an equally sharp fall in new mortgage applications in the US last week, down 10% from the prior week. This came even though mortgage interest rates slipped again to 6.5% for the benchmark 30-year fixed loan. That level is its lowest since May 2023. And across the Pacific, China has set in motion some trade tariff retaliation on the EU after Brussels called out a set of subsidies by Beijing for cars and pork products and called out its human rights record. China is targeting the EU dairy products, most of which come from Germany, France, the Netherlands and Ireland. EU exports were valued at €1.7 billion last year, far less than New Zealand's trade. There is probably a year to go before the Chinese actually apply their retaliation, but there could well be informal blocking at the border, just as we saw against Australian barley and wine before the formal clamps went on. And high debt levels are forcing China's giant high-speed rail operator to sharply raise prices to contain a squeeze flowing from its $1.4 trillion of debt built up when China's infrastructure stimulus programs were in full swing. Now users will have to pay for that, even though they're now facing a broad economic slowdown again. The US Treasury 10-year yield is now just on 3.78% and down 5 basis points from yesterday. And the price of gold will start today, little change, just down $2 from yesterday at $2,509 an ounce. And oil prices, though, are down $1.50. They're just on $71.50 a barrel in the US, while the international price is now down to $75.50 a barrel. And the Kiwi dollar starts today up almost 20 basis points from yesterday at 61.6 US cents. Against the Aussie, we're up 20 basis points too at 91.4 Australian cents. Against the euro, we're still at 55.3 euro cents though. That all means our trade-weighted index starts today at 69.4 and up 10 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.